I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Ballara, and this is the Know Your Why podcast. Today I'm here with Scott Krone. Scott's actually been on the podcast before, so I'm really excited to have you back, Scott, as a repeat guest. So thank you so much for coming on the show.
My pleasure. At least I wasn't called a repeat offender.
Yeah. No, always a pleasure. Scott, you were here before, but maybe can you just give us sort of a brief talk about your background, and then really we'll just get into kind of what you've been doing since the last time we talked.
Absolutely. So I began in real estate, getting my master's degree in architecture. And I was fortunate enough that my professor really wanted to have us work on his projects in our studio, which meant that I was working on real life things. And it turned out to be a 400 unit, $100 million project. And so I worked for him in the morning in his office, and then during class on the drawings, and then at home on more drawings. And so that was for 3 years. And then I worked for him for another 3 years. And then 1998, I ventured out on my own and created Coda. And we began in single family, multifamily, and mixed use. We've done churches as well. And then we've got, the market crashed 08, 09, and everything changed. And everybody was trying to be forced into multifamily because that's where lenders were going in that recessionary and market time. But we began investigating self-storage. So in 16, I sold off my 17, I sold off my multifamily portfolio and began working exclusively on self-storage. And so we've been developing a self-storage brand, investment platform of different facilities across the Midwest. And in 2021, we actually launched our own brand, One Stop Self-Storage. And now we are about to be launching a blockchain with tied to a store coin, which we created, STOR. So in order to help facilitate transactions on both the investor side as well as the customer side.
That's fascinating. How did you decide to go that route? I mean, I will, full disclosure, fairly ignorant in terms of blockchain and cryptocurrencies and things like that. I don't understand how it all works exactly, and I've stayed kind of away from it for that reason. But what is your, what made you decide to sort of head that direction?
Well, I'm part of a mastermind group of self-storage investors, and one of the members of the group is a very diverse and incredibly intelligent and talented individual. And so he was the one who began, always talking about investing in coin and this and that. So during one of our mastermind sessions, I pulled him aside and said, help me understand blockchain. Help me understand coins. What is this really tied to? Because I was like, how can you have a coin that's not tied back to something tangible, something hard that, if it's going up or down, it's the volatility, what's the market relationship? So, and I was equating it back to the stock market, or currency. Currency is always tied back to some basis, because the way I understood it is, if you're mining for a coin, then you could just create an endless supply. And therefore, it was devaluing, deflation, was devaluing the rest of the coins. And so he quickly cleared up a lot of questions for me. So blockchain I think is really where at least title companies are going to go in the future. And that's why I think that this is a revolutionary thing that we're on the front end of and implementing it into self-storage investing. So blockchain is literally a contract that you set up. And when all of those different requirements in the contract are met, then the contract is dispersed, and then it's forever saved across a network of computers. And so it's impossible to penetrate that contract if you don't want it to be. So you could create a blockchain saying, for instance, we were going to have this podcast at this time on this Zoom call, and it's going to be recorded this day, and it's going to be dispersed on this time. And so when all those things happen, then the blockchain is fulfilled, and then the file is then saved across 1,000 different servers. And if you wanted people to be able to access it, you could give them the code and they could access it. And if they didn't want people to see this podcast, then they wouldn't be able to see it. It would be secure. So if you think about a real estate transaction that happens at a title company, you have a contract. And in part of the contract, it says you're going to have this type of financing, this type of due diligence, this type of, results. And when all those things happen, then the money is transferred from one entity and the title's transferred to the other entity. So that is in essence a contract, right? That would go into a blockchain. And the difference is, I think the reason why it's all going to go towards that is because of the security and the level of encryption and all those different things. And so also being able to tie back to those records. So that's why I believe that's the direction of it. And so the idea of this blockchain that's being created is that all of these transactions for purchasing and investing in real estate deals will happen through the blockchain. And it gives, when you create a blockchain, the byproduct is a coin. And so we've named the coin Store. So as people invest in the blockchain, so if they have coin and they're converting it into Store and investing in it, they can take a non-tangible coin asset in crypto and tie it back to a tangible real estate asset. And that's what we're trying to do, is create an investment tool where people will be able to take either crypto or dollar and convert it and then be able to invest it. Now, think about it. Anybody across the entire world could then invest in a specific transaction. On top of that, when they have the coin, if someone wanted to pay for their rent, they could use the coin to pay for the rent. Or if they build up points, then they can get points on coins and then use that as a credit for their self-storage rent. And if they move from one facility that is in this program to the next, they can transfer their coin or their interest from one facility to the next without having to go through anything. And so that is the benefit of it, or that's what we're looking to do. And as the value of the asset rises, then the value of the coin will rise. Does that make sense?
Yeah, it does. And I think it's a great explanation. I think I've heard similar, sort of similar conversations regarding like Bitcoin and things like that, just other blockchain technologies. And one of the things that always gets mentioned, and I'm really just kind of playing devil's advocate, but is that it's secure. Can't, sort of been told it can't be hacked, all of that. And yet I feel like we just found out very recently that that's not true. And it seems like anything can be hacked. How do you, I guess it being tied to, when you tie it to real estate, I would assume maybe that's what makes it more secure, in the sense that there is an actual tangible asset. Is that kind of the thought process there? And again, I'm really is out of my league in terms of knowledge on this, but can you talk about kind of the security of it and how you would combat that sort of, any of that being hacked and someone having, suddenly changing this contract to say that I own the self-storage facility?
Well, I think it's like any other consumer fraud, right? That if you have the documentations to prove that you had the transaction that occurred on, and you have the other things that back it up, right? And those are across different spectrums as well. So it as the blockchain is dispersed, it's not all in one location. So I think what we see is that when there's a hacking going on, it's attacking one server and then they can get into the network and go after it. The idea of the blockchain is that there's only a fragment of that file that is located in that one server. The rest of the fragments of the files are in different servers. So can it be hacked? Okay. Is it less probable to get the entire file? More than likely, because of the fact that it's across a lot of different servers, and only the blockchain is able to bring all those things back into one complete file. So you know, when we were building homes and when we're working with people say like, well, or having a conversation in terms of family succession and planning, right? Like, well, if I die, right? Or if my sump pump fails, or, this, or that. I'm like, hold on a second. First of all, it's mechanical. It's not if, or, it's not if you die, it's when you die. And
Right.
it's not if your sump pump fails, it's when your sump pump fails. Like, what are these backups? What are these other things that we have to make sure that that there's redundancy, that there's things to protect your investment, and if you think about, you invest a lot in your home, you put a lot in your basement, so you're protecting your investment. So is anything perfect that man makes? No, nothing is perfect. But can we make sure that we have done enough or gone beyond what we possibly can think of in order to protect ourselves? And I think that's what the idea of blockchain is.
Very cool. When you, so again, another thing that I've sort of heard is with this allows you to make what would typically be an illiquid investment liquid, because people can transact using the blockchain, using that technology while it's still in sort of the hold time of an asset. Is that one of the benefits that you would describe, or do you?
They would use the coin. So they would use the coin to complete the transaction, and then it's recorded in the blockchain. So the coin becomes the currency by which the blockchain is facilitated.
Got it. So, and I guess maybe just to clarify what I'm saying here, in a typical syndication, for example, with you have your funds, and if someone invests, then they're not typically really able to leave that investment without a lot of serious legal implications during the hold time of that investment. But with the coin, the thought process is that if they wanted to sort of sell their shares in that investment, they could.
Yeah, and I think that it gets into the nuances of that contract. So what is offered? Yeah. So if the sponsor says, hey, we will allow this to happen, then it could happen. If a sponsor says, hey, you can't, then that's going to be the nuance of each individual deal, right? But it does give you the person the flexibility of saying, hey, we can offer this. I think there has to be a stopgap, because what if everyone says I'm liquidating my store coin and I want out? How does that transpire if everyone's dumping it and then you have this physical asset, right? So the only way to liquidate it would be to sell it. So I think the nuances of that is from deal to deal and from situation.
Okay. How does this impact your investors? Is this, suppose you put together a deal, would you be able to, can you take coin and also cash within these investments, or does it have to be one or the other?
No, I think it would give people the ability to do either one. But the other side of it is that you can structure the investment either as the debt vehicle or the equity vehicle within the coin. So there's a lot of flexibility within the program, depending on how the whole thing is structured or how it's presented. And that's, one of the unique factors of it. You could do, in essence, I'm just using a generalized term that people are familiar with, like crowdfunding. You could do a crowdfunding to create the debt instrument.
Again, it's just a little bit beyond me. I love that conceptually. I love a lot of those things. I love that the idea of some of these things that you can do with coin rather than that you couldn't do with sort of typical cash transactions. But I wish that I understood it a little bit better. Is your idea that you're going do you think that's kind of the way that the world is moving, is towards this type of transacting, or is it just an ancillary thing to regular transactions with cash?
No, I think it's definitely the way it's going. It's the new currency, right? My kids don't even carry a wallet anymore because they have a phone and they just tap things, and all these transactions are digital, and They don't know what the value of cash, right? In terms of CIF, my football coach would say when he was selling the sweatshirt, CIF, cash and fist. So it is the new direction. I mean, and I think that, how many transactions are occurring now outside of the normal I would say 1990, 2000 transaction. I mean, in all of our facilities, we're trying to go cashless. We're trying to make people pay either credit card or a check, and preferably, credit card. We make sure we get the transaction so the check doesn't bounce. So in each of these things, we're looking to make systems more routine, more repeatable, and with less hiccups within them.
With this, how do you see this? Do you see this being a part of your business, sort of real estate and blockchain technology as one or two separate business paths that you can combine together? What's your vision of your own, your business and your future?
Well, the blockchain is just simply a tool, right? Okay. So it's no different than saying, hey, we're going to accept payments from Venmo, right? That is a tool in which we still facilitate the real estate. So first and foremost, I'm a real estate developer. That's not changing. But if we can use a tool in order to help build and grow our business, then we're going to utilize that tool. And the flip side is, let's take it back a second. If we were just a simple self-storage facility and say, hey, we're only taking cash, then, we across the country, we'd have to have banking system that we could have in every single one of our cities so that, our employees could go in there and deposit the check, and we'd have to have some way of, or the cash, and then we'd have to have some way of verifying that the cash was accurate, that it wasn't, stuck to someone's finger on their way to the bank and they didn't deposit all of it. So these are all different ways in which we're raising the level of transparency. We're raising the level of accountability within the whole program to ensure that these things are done properly, and that I think and if we didn't have those systems, I mean, there's a reason why these systems were all being created, is to make sure that these transactions weren't, they're being done as well as possible and accurately as possible.
Great. That's great. I mean, it does really seem to offer a broader range for people to, sort of be a part of an investor as an investor. And also, I guess, they can pay for the service that way. So it does open up that picture quite a bit. What on the real estate side, what do you got going on right now? How's your portfolio looking? What kind of growth have you seen over the last year, especially with the way the economy's gone?
Well, we bought a facility in Jackson, Michigan, and so it was an existing facility, and we're bringing more automation to it. So when we bought it, the owner literally had everything in a notepad, and his entire ledger was in a notepad. We had to, Xerox it in order to do the due diligence, and he was running off a flip phone. And so, we've brought a lot of automation to the facility, including, a gate that you have to hit your PIN code to get in, and, raising the level of security there. We've also closed on a property in Bay City, Michigan, where we're going to be developing, and we're under contract with another facility in that, proximity, so that we can combine the two. We're developing in Louisville, so that project, the construction has begun, and that's a mixed use flex warehouse space as well as self-storage. And then we're also own a facility in Cleveland, which we're going to be developing.
Fantastic. That sounds like a great year in the face of what a lot of people have been facing with the market going, interest rates going up, the market getting tighter. Where do you put on your crystal ball, or for a minute, what do you see? And I guess speak to self-storage, because I think, obviously every asset class is individual. So where do you think things are going here over the next 6 to 12 months, maybe even 24 months? And maybe, I mean, you can compare it to what you think is going to happen in multifamily, but I'd be curious what your thought process is on where we're going.
Well, back in March, I was presented with an award, and I presented this topic in Las Vegas, that we were entering into a recession. And I compared it to 1979. And, a lot of people are like, oh, no, the housing market's great. Look at and I go, that's one of the key indicators. There's this overwhelming, bubble that is brewing within it. Now, what's interesting is that I fully believe we're in a recession. So, and I believe we've been in it. And I look at, when I look at politics, I look at the historical patterns of the political landscape and how it impacts the economy. So not necessarily whether I believe in one person's or another's party's politics, but how does the politics and the political makeup impact the economy? Does that make sense?
Yeah.
So back in 1980, when we had everyone thought the economy was horrible. Like if you can go back and watch Miracle, you can see, people waiting in line for gas, for gas. And, inflation was, we had stagflation and people's homes were trading because of the mortgages, not because of the real estate market, because they had this great loan on a 30-year loan that was at an interest rate at 7%. And that was way better than what was being offered. So people would sell the home based upon the mortgage because people could afford more by owning that mortgage. And so I went back and compared them side by side, like where we were in like gas. If I had asked you what you think the adjusted price for gas was in 1979 compared to today, what would you think the price would be?
I live in California, so this is always, the price of gas is always a tricky question. I'm guessing because of the tone of your question, it's probably similar or higher than it was now. It's
$2.35 adjusted to today's dollar. In Chicago, we got up to high as $6-7 a gallon. In California, it was equally as high, right?
Yeah.
And so, when we looked at unemployment, when we looked at the rate of inflation, all these factors were very similar to it was 10 different data points that were very similar to 1979. And what changed the outlook of the economy was when Reagan came into power, the presidency, he changed not only the monetary policy, but the fiscal policy. And right now, the imbalance of this recession is based upon the fact that our fiscal policy and our monetary policy are not in alignment. And we're spending lots of money, which then created this massive inflationary rate. And so we were seeing housing going up, we were seeing groceries going up, we were seeing, we had supply chain and this and that. But a lot of it was also based upon how much money cash people had and were spending it. And, we would see these huge prices increase in construction. And it was like everyone was saying, well, it was the cost of labor. And yet, if the cost of labor was so much higher, then why were people complaining about what they're paying at the gas? So it didn't match up to me what was going on. And ultimately the value of people's pay did not increase the 300% that we saw in some pricing or, doubling and this and that. It was artificially inflated. Now we're seeing that pressure coming back down and, the Fed had to respond. So right now, the only thing that they could do is raise interest rates, which then automatically puts a brake on construction. It puts banks pull back. They want to risk less. There's less value in the marketplace because the people can't buy as much with the dollar. So naturally, the economy is going to slow down. And so we've been preparing for this in our product since 2008, 2009, when I saw this huge market crash because of it. And that's when I began getting into self-storage because I saw the resilience of it. Now, if we also look at the housing, there still is a shortage of housing. And I think that in certain markets, there's going to be demand for housing because there's just not enough housing stock. I think that is one of the pros that is in the economy, is that we have to build housing because of the fact that there's more people but it's a matter of what they can afford. And so I think it's going to be interesting to see what happens within the marketplace. We're already seeing new home construction change because of the people can't afford as much. So there's less permits being pulled, which is going to put more pressure on it. So the fact that multifamily has been at a historically low cap rate, the imbalance right now is the cap rates are below the interest rates. So it's impossible to make money on them within that yield. And so something's got to alter within that rate in order to adjust for it, because of the fact that if, there's always been historically a gap or a separation between the cap rate and the interest rates, and that's where investors make their money.
Yeah. So do you think, comparing self-storage to multifamily there, I mean, you can make, I think there's an easier correlation to look at between, okay, we have a housing shortage, so maybe multifamily values don't drop a lot. What do you think, from a self-storage standpoint? It's always been, everybody says it's recessionary resistant. What do you see happening specifically in self-storage through this? I don't think there's any reason not to call it a recession.
Well,
it seems very much like one.
Yeah, if it feels like looks like a duck and walks like a duck, right, then it's probably a duck, right?
We can change the definitions, but ultimately, yeah, it's probably still a recession. So,
right.
What do you think on the self-storage side? How does that get impacted?
Well, and people are comparing this quarter to last quarter of last year, and there is a slowdown. There is a reduction, but that's what's in the last 4 major recessions. That's what we've seen. We've seen a slight decrease and then an increase in occupancy. And so there's an adjustment. There's a fear factor of what's going on. People are hesitant, reacting, but then we're too early in the recession because the pain stuff hasn't really started yet, in terms of having to refinance and having to work through different loan options and this and that. Those are all real things that are becoming, more fluid. And I think that our banking system is set up better than it was in 2000 and 2008 and 9. There was just so much layering going on within the debt structures that it created the crash, but I don't think we're anywhere near the same sort of thing. It's just a matter of all these loans are coming due now. And so, how they relate to their debt coverage ratio. And I think that's going to be the bigger factor to see what happens with a lot of products on the marketplace. So in any market, there's two types of investors, those that pull back and those that see an opportunity. And so, we've been preparing for this opportunity to make sure that we can launch successfully and continue to develop our portfolio based upon the historical performances within self-storage in the marketplace. So we've based our whole strategy on looking back historically and seeing, is it perfect? Is it a crystal ball? No, but it gives us a pretty good indication of what's happening.
Well, and we had it was so, sort of good, right? It was, the occupancy rates both in self-storage and multifamily were so higher than normal. Prices were higher than normal. All of that growth was so big that, some of what we're seeing is just almost a return to the norms.
It's a correction.
Yeah,
right.
It's just, but because people who came in at that, if they hadn't been doing it that long, came in right at the point where it was like everything was so great, that's all they had seen. And then, but you have the benefit of having, kind of seen these up and downs. So it's probably a lot about perspective.
Absolutely. And we always say you make your money on the acquisition, not the sell. So you got to make sure that you're buying right. And to me, it doesn't matter if you're in a strong market or a negative market or, wherever. You still got to buy on the fundamentals, right? And if your fundamentals aren't correct, then when there is a correction, you're going to be feeling it. That's just the nature of real estate in the markets.
Yeah, absolutely. Well, that was a great sort of rundown on what's going on in the economy. I appreciate your perspective on that. Let me switch gears, Scott, so I can ask you the questions. And I asked you them last time, so we'll see. Maybe your answers are the same, but things change. So the first question, of course, is what is your why? I don't know if you have had any evolution there. Obviously, you're sort of introducing us to a new, at least component to your business. So what's your why? What's driving you at this point?
Well, things have changed. I'm now my youngest graduated early from high school and enrolled early in college so that she could train with her athletic team. So we're officially empty nesters. So why I can expand a little bit more into different areas and broaden the breadth of our investment is because I have more time. So it's a matter of we're in a different stage of life, and so. My why I'm choosing to do different things is altering because, my kids are now becoming adults and are adults. So it gives me a little bit more bandwidth, if you will.
Yeah, it's fantastic. Yeah, there's a, it's funny, as a parent with relatively young kids,
this day will come for you too.
Yeah, it's, years down the road. But the funny thing that I always it strikes me is it's like, I thought I was busy before. Like I thought life was pretty busy, and then we had kids, and I'm like, nah, it was
Well, the
it was
way
really
I
a piece of
describe
cake
that
before.
is you know, when you get married, you realize how selfish you are. And then when you have kids, you realize how selfish you still are.
Yeah. There's a whole lot that, it really does change. I mean, back to perspective, it really does change what, kind of the outlook on everything, and just the amount of time is like what did we do with all this time before? Like how have we filled the day now with these children? And it's like, it's like impossible to find time. And before, it's like, what was I doing?
Exactly.
So young people without kids, start your business and investing while you still have the time, and use it wisely. Second question, Scott, tell us something. I guess maybe you just did. You're an empty nester now, but something just to let the audience know you a little bit better.
Well, I've enjoyed, one of the things that when we dropped off my daughter, the coach said, when a lot of girls show up, they're not ready. And this one, she's ready. And I took that as a huge compliment, because it said I prepared my kids well, and that they're ready to be off on their own. And for me, what that really means is that we gave them opportunities to succeed as well as to fail. And, it wasn't that we propped them up. It wasn't that we were helicopter parents. It was more of the fact that, for instance, my daughter, she said that she wanted to learn how to fly. So we gave her 8 flying lessons for graduation. And everyone's like, you're flying? She didn't have to go report to school her senior year until like sometimes 12 o'clock. So she would go in the morning and fly, and then fly up to Wisconsin and fly back and walk into class. And she's like, you know what? I'm the probably only one in this room that was flying this morning.
There's probably a pretty good chance of that. Yeah.
Pretty good chance, right? But the point is that she saw an opportunity, and granted, this was an $800 investment. It was an $800 gift. It wasn't like we spent hundreds of thousands of dollars for this to happen, right? Or thousands and thousands of dollars. But it was an opportunity for her to push her boundaries, to push herself to do something new, that now when she goes into something, she has the confidence of saying, like, I can handle this. I can do this. And I think that was our perspective on life. And that's my perspective. Is a lot of times, I've been asked to speak at the ISS convention in April, and we're talking about starting your own management company. And a lot of times we get bogged down with the idea of fear. And the biggest thing of starting something is overcoming that fear that I'm going to fail, right? You might fail and you might succeed, but the biggest thing that prevents a lot of people from even trying is the fear of failure. And, that is something that, we all face and we all have to deal with. It's just a matter of how much we get used to trying. And the more we try, the less fearful it becomes. So that's something that we've always tried to implement with our kids and in our lives, is constantly growing, constantly trying to improve and do things better. And that's why we started our own management company, because we're like, this is not, what we're seeing is not good enough. We got to do these things better. Was there a big risk? Huge risk, and we're still working on, developing it and making sure that it's done well.
Yeah. No, I mean, I love that. I think that's a great, I don't know of any high school students that were, that are flying. I mean, there must be some, but that's very unique. And it's a big deal. I mean, it's no simple task to learn to fly and do that and be faced with such a lot of high school students are just learning to drive a car, and like that's terrifying. and they're not good at it and all. And here she is up in a plane.
The funny story, her first flight, I'm in the back seat and I'm like taking a picture, like
they let you fly like with them right away?
Yeah. So this shows you the succession. And I told her, I said, look, this plane is basically a go-kart with wings.
Right.
I mean, it is so light. So the first flight, they had her hands on the pedals and the stick, and she was doing it with the instructor. And then they're practicing stalls, like the first one. And the reason why you're practicing stalls is like when you have a problem with the car, you just pull over, right? You get a flat tire, you just, okay. When you're in a plane and something goes wrong, it's like you still have to get down, right? So I'm like, what do you mean we're practicing stalls? And they're like, we're going up and and I'm in the back just flopping around. The second flight, she's taking off and landing on her own. So I mean, that was the progression, how quickly. And so within 8 flights, she's flying to different cities and touching down and taking back off and going all around. So it's a quick learning process.
That's really amazing. Wow, that's very cool. What sport does she play?
She's a soccer player, so she's at TCU. She's playing soccer there.
Awesome, congratulations. When people hear this and they want to reach out, what's the best way?
I appreciate that. And again, like what we did in the past, if anyone wants to learn more about self-storage, we're happy to. If they want to email us, happy to talk about with them if they think they have a good deal. But if anyone mentions the show, we will send them a deal analyzer for self-storage so they can compare it to multifamily or any other investment. But it will also send them a feasibility study to say why we chose to do a specific project. But they can reach out to us at info@coda, CODA, mg.com. That's info@codamg.com.
Great. Final question for you, Scott. What advice would you give to someone who is getting started in self-storage? You can really take that however you want. You've got a daughter that just started college. You have a lot of different angles you could go here.
Well, I'm going to take it just starting off. Like you can take it back from self-storage or, any project, anything that you're looking to do. First of all, you need to really assess yourself, right? Are you willing to take the risks? And not everyone is cut out to be an entrepreneur. I truly believe that. There's a lot of people that are uncomfortable with that. And, perhaps you shouldn't be a business owner. That's fine. That's great. There's roles for everybody in life. But if you really feel that that is your call, that is your mission, that you're set out to do that, then find people that you can model your business after. Fortunately, when I first began as a TA, my professor, I worked with him for 6 years. I was in his business. I got to see it. So I traded my time for, a very small salary at that point in time because I recognized it was a learning experience. Then as I was trying to grow my business beyond some small little company in the northern part of Chicago to something that's across the Midwest and across the upper portion of the country right now, I sought out another mentor. And, he's like, this is what needs to be done in order to develop a business that is scalable. And so, I looked to people to assist me with that. A lot of people think that you can read a blog and you can learn all that. Those are great tools, but ultimately I think having a mentor, having someone that can help you through those processes equally as important.
It's great advice. Scott, thank you so much. Thanks for coming back on the show. Thanks for kind of sharing everything. Really excited for you for this, sort of the new things you have going on, including being an empty nester. I mean, there's a lot there to be figuring out. So very happy for you. Happy for your daughter. That's awesome. But yeah, thank you again for coming on.
My pleasure. Thanks for having me.
Yeah, absolutely. Folks listening, when you hear this, I'm sure you're going to love Scott and definitely reach out to him. But if you enjoy the show, please like, rate, and review, and that will allow us to get more great guests like Scott. Thank you. I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.